Hello everyone, and welcome to SaaS TV, the channel for everything SaaS in India. Today, I'm interviewing Bharat Banka, Amplifi's Advisory Council member and one of India's top angel investors. Bharat has decades of experience in one of India's most recognized corporate brands, the Aditya Birla Group, and today he's ranked among the top angel investors in the country, having invested across the spectrum of consumer and enterprise. So Bharat, question one, how do you actually evaluate startup deals, and what are your top criteria?
Yeah, so I think when you ask about what do you look at in a transaction or in a company, I think the best thing and the foremost thing that one looks at is the founder. It's often repeated, but I think the founder probably constitutes more than 2/3 of the weightage on why you would go and invest with someone. So that's, I think, the first one. The second point would be, again, I think the overall opportunity that's there, for the idea that comes to table. And the third one will be actually the scalability of that. So, there are various theories about what is more important, what's less important. But my guess is that I think one has to start with the first, the overall the market, and the opportunity has to be large enough, followed by, I think, if you can combine that with an excellent founder, with a lot of passion, I think that could be a deadly combination for a success. So my guess is that I think while selecting, these are the 2 or 3 things that one has to look at in the beginning.
What are your thoughts on enterprise tech in India and opportunities for founders in enterprise technology, and especially SaaS and cloud?
So traditionally in India, I think India has been a market where even if you look at mature investments, as against this often called manufacturing in India kind of succeeding, the most successful alternate assets also, investment that have succeeded in India are into consumer, IT, pharma. Manufacturing, I think, they have been far and few between, where the successes have been. So I think, when you go to IT, I think, which is a specific area where in technology you will see a lot of successful companies coming out of India and being successful for alternate asset players. As a part of that, I think enterprise software or the product companies are the ones which did not get that kind of an attention till very recently. Interestingly, what you see now is that there are lots of product companies that are coming out of India, and there have been multiple successes, on that, call it fresh desk. And that probably validates the point that there will be a lot more play in the enterprise software. Maybe the models could be different, where some people could start in India and then sort of go offshore, for looking for their markets. In some cases, maybe they'll get their validation, I think, offshore first and then come to India, as a market. But however, the SaaS based and the cloud is sort of the next big thing, where most of the enterprise soft players are going to be sort of based out of cloud, which makes it easier, cost efficient, and even from a potential customer in the B2B space, I think that is going to be more relevant and more convenient. So there's a huge scope out there, and as a betting person, I would say that in next 5 years time, you would see at least 3 or 5 large global scale kind of enterprise software companies coming out of India.
What is your view on the angel investing scene in India? Is it growing? Do you see a lot of interest in angel investing as an alternative investment class?
So when you ask that, what's the sort of scene on startup and angel investing, I think in India, one has to go back to see that typically I think India has been a hugely big growth market, and now it's a big enough market for a lot of tech companies to find domestic markets itself, as a big consumer for their products and services. Now that is the foundation stone of why you are seeing so much of an action in terms of the startup scene. I think a lot of Western side graduates, who are coming back to India and starting business in the ID technology and the products, is because a lot of those good practices, that have succeeded in other parts of the world, whether that is US and Europe, or whether even a large market like China, it's very much replicable in India, and that's why you're seeing a lot of action. So that forms the foundation on why suddenly I think you are seeing so much of an interest in the startup and angel investing in India. As an investing class, I think angel investing probably is a much more recent one, where the vintage of the same would be less than 5 or 6 years time, and you would see a lot of family offices, I think, with their surplus money and meeting I think passionate ideas and the passionate founders, would find I think a lot of investments I think to take place in some of these startups. So today I think one would sort of hazard a guess and say that maybe next 10 years time, India I think probably Bangalore, Bombay and Gurgaon I think would look like more Silicon Valleys I think as against what they are looking today.
Looking at all the media, news, articles every day about fundraising, there seems to be a frenzy in the fundraising space, and anybody and everybody seems to be able to raise money. Do you agree? And what are your views on this?
So I do not quite agree with the fact when you say that the funding has become easier and it is very convenient for startups. I think that's a very very generic statement that you make. I think you have to be on the street, meet few of the people at the IITs and IIMs, where the youngsters have come out and they are struggling to raise money, because increasingly there is a lot of polarization in terms of what kind of differentiation in terms of ideas and its execution I think that you bring to table. So the Me Too's, in terms of someone actually succeeding with an idea and going ahead, are finding it very difficult to sort of get sort of funding in India. It's a different thing that probably at an angel level, and which is where I have always said that the term angel investing that people use is an oxymoron, because you would never see an angel actually expecting a return on whatever he has contributed or she has contributed as an angel, and an investor actually would look at return. So investor is not an angel, and angel seldom is an investor. Having said so, my feeling is that still I think there are lots of good Samaritans, who actually are enamored by an idea, and they are willing to sort of back that with their capital. And if at all, I think there's a return on the investment, it's an upside for them. But I think they are more enamored by the idea and they fund it. So those are the pieces, which beyond their sort of seed stage kind of a capital, where they would have been able to raise, for them to go and raise a serious institutional amount of money at Series A or Series B, that I think is becoming more and more sort of polarized. It's becoming more and more curated.
What are the exit options for angel investors in India? Is it easier than before? And how easy or what are the exit routes you see for angel investors in India?
So I guess I think you are asking about the exit door even before people have sort of not settled inside the hall, because as I just mentioned, I think that the vintage of angel sort of investment or the seed capital investing has been less than 10 years. So hardly I think some of these companies which are futuristic I think in terms of their innovative ideas, there's not enough time of more than 4 or 5 years time to see successful exits for angel. If you would go back and see wherever investments would have been made say 5 or 6 years back, yes, there are about 5 or 6 sort of large deals, mentionable deals where angels would have found their exits. The big question being that what are the modes of exits? So the scenario that we have out today here is including the capital markets in India, that most of the exits that you would see for angel even for a long time to come are going to be through the next Series A, Series B rounds, where the venture capital funds probably would be providing them an exit. In select cases where companies become mature, maybe in 5 or 6 years time to get acquired, maybe in some of those cases they'll get exit through the strategic players. But for some of the companies in India, I think to imagine that they would be able to IPO just like probably an Alibaba did in China is probably a little bit of an early thought to my mind. The few of the startups, so-called startups in India who got listed, something like a Just Dial, they had to wait for almost about 10 to 12 years time. So I would say that in what context I think you discuss about exit. Yes, exits would be available, but the avenues for exits I think for Indian angels, I think that is again a caution area, that they need to be mindful of the fact that exits are going to be through the next level of investors who are coming in the company, and that has its own peculiarities. So I think they should keep that in mind.
What do you think of the current valuations for startups?
I think valuation, I think it's a very, very wide subject, and we can't paint everyone with the same brush. When you say that, what's the view on valuation for the startups? I think it's a very open-ended kind of a question. What I would say is that there is a polarization, and you would see some of the in each of the horizontals. you would see some kind of a polarization where 2 or 3 people, early players or maybe even late stage entrants, who would have taken what I call a pole position. And by pole position, I would mean that they have sort of cracked that model, and they have sort of found that recipe to become, I think, one of the leaders in that 2 or 3, within the 2 or 3, the top leaders in that particular space. What also that manifests in is that then incrementally the uh, every sort of additional dollar of capital financing that's going to come is going to be available to those 2 or 3 people who have taken a pole position in that particular vertical or a horizontal. Now, beyond that, I think the valuations, I think, will have their own challenges, because as a leader, I think, as in any other traditional market as well, the top 3 players as a leaders, I think they would corner almost like 80 or 90% of the capital, and people are happy to, as investors, to pay, I think, a significant premium for that leadership position that these some of the pole position people enjoy. For everyone else, I think valuations will be more of a function of what these people can sort of achieve over a period of time, whether there is a potential for some of them to get acquired by the larger pole position kind of players, or maybe some of the strategic players. So valuation would not cut across, I think, in a similar kind of dynamics across some of the people who are leaders in that players. Now, this is also a traditional fact that in traditional industries also this rule applies, but it is more so in the startups, because the death rate or the sort of rate for mortality for some of these companies who have not been able to reach in the pole position is going to be lot longer, because they'll just not get uh, lower valuation, but some of them might not get the capital itself. So I think we have to bear that in mind.
What is your advice for founders starting off on their entrepreneurial journey?
Actually, I'm a wrong person to give an advice to the founders, because some of the smart startups, I think, that are starting today, they are excellently sort of very well educated, they are very well traveled, they understand, I think, what are the global trends. However, I would want to touch upon some of the more softer factors, what the founders should do in case, I think, they want to build longer term businesses, sustainable businesses, and also sort of generate respect for themselves as founders of some of these eventually large organizations. And there I would say that some of the conventional wisdom in terms of what qualities they should build out and they should express, I think, when they are dealing with people, is a big amount of integrity. I think an integrity to an extent that when they are meeting, I think, probably their first advisor, they are meeting their first angel, they are meeting their first institutional investor, what kind of integrity are they expressing in terms of their business idea, in terms of originality and the genuinity of the kind of plans that they are presenting as individuals, how they are treating the partners that they have, whether that is their vendors, whether they are their shareholders, or even sort of their own partners and employees. So I would say that increasingly you would see that even globally, I think the large startups, which became big and successful, the founders of those, probably had a big foundation of integrity in various forms. So probably in my mind, I think that's the only soft factor that I could suggest, that as founders, I think, in terms of their vision to build long-term businesses and large businesses, this is something that has to be foundation. And then if they follow that, I'm sure lots of challenging times that would surely come, over their journey, they would be able to see that on their left, on their right, in their front, and on their back, they'll have a lot more friends who believe in them rather than who believe them as just a fair weather friend.
As one of India's most successful and respected angel investors, what tips can you give to other angel investors, especially those that are first time?
So, I would feel that in terms of sectors, that going forward are going to be sort of some of the big blockbusters in India, and that comes out of the fact that what kind of demand is getting generated and which direction the economy is taking. Is that I would feel that in fintech, I think there's a lot of potential, and the fact is that there will be a lot of business models that will get disrupted going forward. The banking, I think, the way it gets done today, it's not going to be the same way that is going to get done tomorrow. So, I met a few of the youngsters, I think, who were sitting, and these are the challenges, and who would say that why would you expect someone in future to go to a branch and bank? So this, I think, this was a comment made by some of the young guys, I think, about a few years back. Today it is manifesting in terms of the payment banks and the payment gateways and the payment sort of companies that you are seeing. The next one probably would be on your credit evaluation. So today I think the models of the credit evaluation by credit rating agencies, the way it is done, which is more historic and not on the social behavior on how a person is going to react, I think going forward on his credit or default, that's probably I think is going to sort of be topsy turvy, absolutely, because today most of the ratings I think are done based on history, and which is not which does not indicate on whether in the future you are going to default or not. So in fintech, some of these I think are examples where it is going to be extremely disruptive. Second area probably in my mind would be something like wearables and IoT. So in that cases, because increasingly I think the focus on healthcare, on education, and even in terms of remote monitoring of how probably some of your relatives all that are doing health wise is going to become very important, because a trend increasingly would be that a lot of people will become self aware about the need to remain healthy rather than being reminded about the need to remain healthy, and that would manifest into a lot of wearable devices. This is only one of the applications. The third one I would say is that to facilitate some of these, I think cloud and mobile I think are going to be two of the biggest platforms and enablers, and which is where to my mind I think what I just mentioned a few minutes back is that enterprise software companies I think can play a big role out there, and the models that probably are going to evolve are B2B2C, and probably you will see I think increasingly most of the companies not remaining either B2B or B2C, but this fusion needs to happen, because the delivery probably will happen at B2C level, but a lot of back-end work to develop and develop the thoughts would probably happen at the B2B level. So that's I think probably the next trend.